All right, good morning, guys. Today is Wednesday, February 14th. As always, doing analysis for US 30, gold and EU. So starting off with the daily bias, US 30 is bearish because yesterday we had this closure below this SAR level, and you can see that's where we are rejecting from. For gold, bearish as well, EU bearish, and the US dollar bullish. Starting off on the 15-minute time frame, let's see what we have here. We'll just mark up this sell zones right here. So that's a double sell SAR region. 1, 4, 5. We have another one up here just for the day. And then we have um, excuse me. So we have this sell SAR regions. So you can see up here, we had a test and rejection entry. So test rejection, price came back up to pick up liquidity from here, and we are having a meltdown there. So nothing for now on the 15-minute time frame. And then for the 30-minute time frame, we have this double SAR region here. So we might get a possible break and continuation here. For gold, here, we have this double SAR on the 15-minute. Is it? No, that's not the one. So it would be this smaller one right here. And then no zone on the 30-minute. For EU, EU here, we have a double 256. No, that's not it. So EU would have to be this zone right here on the 15-minute time frame. And then no zone on the 30-minute time frame. Reset. Excuse me. So here, so this was a perfect one. This test and rejection was a perfect entry, because you'd have been test rejection and you'd have entered this, but that was during market open, and I said I wouldn't be taking market open trades, but this would have been a nice test and rejection entry off of this double SAR or off of that supply zone. But here, if this candle closes, it might give us a test and rejection entry on the 15-minute time frame, either a test rejection entry or a break and continuation entry. So it can give us a break and continuation entry either on this zone, on this zone, or this zone right here. So definitely today looking for sells on US 30. So the most optimal US 30 sell would be this test and rejection entry off of this top zone right here. And if you look on the daily time frame, this reacts exactly off of the daily SAR that was formed yesterday. So normally you expect after a daily bias changes. So for example, here for US 30, when we close below this SAR, you normally expect price to go back to that zone, and normally you expect a retracement back down. So same thing might happen to gold here as well. gold might first come back to 2018 and then melt down there, because normally you expect a retest of that daily SAR. So that's probably what's going to happen with gold. It's what's happening with US 30 right there. So here we'd have to wait for this. Again, I haven't taken a single trade this week, but here the best, if it's a break and continuation entry, I would rather take it on this zone. If it's a test and rejection entry, of course, I would rather take it back up here. So even though this 15-minute candle closes below all these three double SAR regions, and then we have a 15-minute candle that closes below this region, it would validate 1, 2, 3, 4 double SAR zones for a break and continuation, but you always ask yourself which is the most optimal zone. So of course, if we have two 15-minute candles closing below here, this is not the most optimal zone. This one would be the most optimal zone for a break and continuation. But on the other hand, the top zone up here would be the most optimal zone for a test and rejection entry. On the 30-minute time frame, same thing. Here we would have to wait for two 30-minute candles. So this one and this one, and the next one, hopefully. So if the next candle closes below this zone, that would be what is that? A break and continuation entry. So we'll just have to wait for what US 30 will do. So what I would want here is for them to come and pick up liquidity here before dropping back down. So there's nothing for gold. It's only this double SAR region here, and we don't have anything. So I was hoping we have like a test and rejection, but all these candles, both of these candles started within the zone. So gold, you'd have to wait for a new setup, either a break and continuation or test and rejection. But I do see gold going back up to go to the 2020, 2018 region, pick up liquidity before falling back down. Nothing on EU as well. On the higher time frames, let's see what we have on the higher time frames. On the higher time frames, this is actually a valid. This is equal highs, so that's not a valid sell momentum sell signal. So on the higher time frames, we have this double SAR region on the hourly time frame right there. This one does not qualify. This one does not qualify. They're a bit too far from each other. The next one would be this one that's above here. So I'll just mark the ones that are next to where price is at. So there's that one. So that's on the hourly time frame for US 30. For gold, you can see where I was talking about 2018, 2020 region. We have, that's the next region. We have the double SAR region. So here, this is a double SAR. 2020, 2019. This is another one right here. So that 2020 region, we have a lot of sell momentum for gold on the hourly time frame. So I'll just mark those three for now. And then EU had already marked from way back because EU didn't change the, and I see US 30 is coming back up. EU didn't change the daily bias as of yesterday. So yeah, gold, I do see gold possibly going back up. So no momentum sell for EU, no momentum, valid momentum sell for gold. On the hourly, no valid momentum sell for US 30. Both of these momentum sells are invalid. And then we go to the 4-hour time frame. On the 4-hour time frame, 4-hour time frame, we do not have, this was 1 hour. So let me change the color. Okay, so this closed below these three regions. So we are still, we need to wait for this 15-minute candle to close. in order to see what setup we'll get for US 30. Um, this one also was a hourly one. This one is hourly. This one is hourly as well. For the 4 hour, any 4 hour zones, this one is too big of a zone, so it doesn't count as a double SAR. 640 to 580, that one is pretty big as well. So I don't see any 4 hour zones. No valid 4 hour momentum sell here on US 30. For gold as well, no valid 2016.8, 2018. No, that's too big of a zone. 2018 to 2018.1 to 2019. So this is a better zone. The most optimal 4 hour zone is between 2019.4 and 2018.9. So this is a valid 4 hour double SAR region. And then beyond that, the next double SAR for gold would be at 2031. So that's a bit too high. If gold gets back up here, probably the daily bias would have changed to bullish if it were to push that high. Nothing on EU. So no valid momentum sells on the 4 hour time frame, no valid momentum sells on the 1 hour time frame for both gold and US 30. So for today, this is probably the only trade setup that I do see. Maybe we'll get the 30-minute trade setup. So if this 15-minute candle closes where it is right now, yes, it would be a valid break and continuation entry based off of these two zones right here. But again, for me, I always ask myself, which is the most optimal zone? So for a break and continuation entry, this is the most optimal zone. So even if it does close here, personally, I'm not going to trade these two zones right here. I would wait for price to retrace back to this zone if I'm trading a break and continuation. Also, when these two 15-minute candles do close, the trade setup, and I do see US 30 flashing soon. If this 15-minute candle closes as well, it will also validate a test and rejection entry. So if I put this two up, the test and rejection will be based off of this zone that's above here, test and rejection cell. And then the break and continuation would be, so for me, this is the better trade. The break and continuation trade would be, it depends on where this 15-minute candle will close, but this is the best zone for a break and continuation trade. So possible break and continuation sell. Yeah, so we'll just wait and see how that 15-minute candle closes. Nothing. I wish we had a momentum trade in any of this. Yeah, this week for me personally, this week has just been too slow, given that I haven't taken even one trade. What else do we have? If you guys have any questions, feel free to ask. I'm not sure we're gonna get any trade today as well, and I definitely don't want to force anything. But this, excuse me, this 30-minute setup might be probably the best one here for US 30. So we might get a break and continuation on the 30-minute time frame right here. Break and continuation sell. So probably get something in the range of, but we need two 30-minute candles to close below that region. So maybe this is the better trade because on the 30-minute time frame, there's only one zone that's there. Mm. All right. Okay, gold might do a break and continuation on this zone, but even for that, we need to wait for like 25 minutes, because this is that 15-minute candle. So, and given that this is the only possible area for gold. Now, if gold does break 19, what is this zone right here? That consolidation zone. Definitely, if we break 1991 and have strong bullish pressure up here, gold might go back to the 2000. So you can see 1991 is that zone that's holding gold. But here we might get a break and continuation sell on gold, but we have to wait for two 15-minute candles to close below here. So maybe something of this sort all the way to 1984. But keep in mind, what we looked at on the daily time frame, that gold might go back to 2018 to retest that daily SAR that it formed yesterday. So what is this? Possible break and continuation sell. Right. This is a 4-hour region. Okay, we'll just wait for US 30 to do its thing. What I would like to see, I would want to see US 30 come back up and close this 15-minute candle to close somewhere around here. So close above this double SAR zones that are right here. This zones it's rejecting from. Just, on the higher time frame, we have some sellers sitting there. Markups. We do have hourly bullish high, hourly bullish low, but we also have an hourly bearish order block here. Markups. Oh, gold is sitting at a daily bullish order block. This is interesting. This is actually interesting to see. Yeah, so I think gold will go back up for now. Because we're sitting at this daily bullish order block. And you can see we have demand. We have demand here. We are also at a discount. So this zone, especially this little zone right here. So in any case, maybe buys on gold are better because you can see we are at, if I take this off, if I turn off those indicators, you can see here daily bullish low. So gold is not breaking this, and it definitely takes a lot to break a daily order block. So this right here might be a possible buy on gold. Let me see. But if I were to buy here, I would want to use the momentum indicator as opposed to SAR for now. Let's see. This is on the hourly time frame. Let me think this through. Momentum. Switch this to SARs, bullish SARs. I don't think we have anything here. Actually, we do. 1988.5, 1988. So the most optimal double SAR is this one right here, 1987. So if I go back and turn that off, we'll probably get a better view of it. Reset. This is tricky. This is on the hourly time frame. Uh, I so normally what happens, they manipulate or they mitigate this whole OB. So I think it's better to let me see. So this is 88, 87 area on gold. 88, they might go all the way to 85. I think what I'll do, I'll probably set a buy stop. I'll set a buy stop on gold. At where's that bullish order block? Okay. Trying to think quickly. Let me change this back to buys for now. I'm trying to see a momentum buy, because that's what they might use to take price up. So the daily order block is at daily bullish low is at 1986. So 1987, 1987 right here. I don't think we have any, we don't have any SARs here. So what I would want is to see a momentum buy. So I want to see a momentum buy in this zone right here. So I'll use the daily, the blue line is the daily bullish order block. Daily bullish low, and you can see that rejection off of this region. So this, I want to see a momentum buy around this zone. Well, this is gold. So for now, I'll actually take off this sell on gold and then trade the daily bullish order block. So this is daily bullish low. So here, what you would want, so now if this 15-minute candle has a buy signal, Now that's what I would take. So I'm waiting. So when you have this daily or weekly or high time frame order blocks, you normally expect price to go down first so that they mitigate it, and then they come back later, pick up liquidity, and then go back. So you don't want to jump in just as of yet. So I would say if say gold gets to 1983, 84 region, so goes far down enough to mitigate this order block, this daily bullish order block, then you can set a buy stop at say 1987 with now stop loss below the previous low that they had formed. So again, this is definitely a matter of patience for this particular trade right there. Okay, so US 30, this US 30 trade, what we have here, so it validated the test and rejection and also validated the break and continuation. So now it moves from a possible break and continuation and possible test and rejection to an outright test and rejection and break and continuation. So here, what we then look for is the most optimal entry. So of course, yes, the trade validated here, but you ask yourself, even if you're trading a break and continuation, the zones you would be trading break and continuation for are 1, 2, 3. So you ask yourself, which is the most optimal zone? So if you're trading a break and continuation, that's your most optimal zone. If you're trading a test and rejection, the top zone is your most optimal zone. So for me, I'll wait for this sell on US 30. It might not get here now that I think of it, because it already picked up that sell side liquidity or retested the SAR from yesterday on the daily. So this break and continuation might be the better option. So this is the trade I will be looking to get into if US 30 gets there. But of course, we do our markup so that we know anybody who just entered the trade and they don't care about overextension, at what point would they achieve a 1:1 risk to reward so that they can set break even? So this is the point. So if US 30 gets to this zone first, before coming back to this zone, I'll just go ahead and delete the both of these trade setups, because you'd be trying to catch a trade that somebody else is at break even for. But if you guys do, again, you don't have to wait until I enter, but this is a trade. This is the trade that validated A for the test and rejection and for the break and continuation. For me, I just see red flags, but it's not to say that the trade wouldn't go straight down. So this is the other one. Uh, I'm looking out for more. Uh, 1987, 85, 87. So not yet. Let's see those zones. Gold, gold, gold. We want this lower lows to switch from a lower low to a high low. So all this, right? So you don't want lower lows. So we want to start seeing high lows. Now, if this does close above here, above this zone, I might take that trade. And there goes that one. There goes the pump. But we have like about 10 or so minutes before this trade closes. If you had already set your, because I talked around 1985, 84, if you had already set your buy stop, then you would be in. For me, I'm still not in the trade. I'm just waiting to see how this 15-minute candle closes, because I want to see this rejection off of this zone. And I already know this is a buy zone, right? So even to the left here, you can see that's the discount area. And it rejected exactly at the bottom of that discount zone. So if you do see any confluences, again, you don't have to wait for me. But for me personally, still not yet in the trade. Now, on the 5 minute, we probably will start seeing those higher highs. So not yet on the 5 minute time frame. So just patience. US 30, US 30. Mm, mm, mm. And there it goes. And there comes back US 30. So you can see, right? You can see the importance of waiting for retracement at times or to wait for price to come back to your zone. Mm. So eight more minutes. See something. What's the low of 85 to 84? So if this candle closes next to this daily bullish low, I will look to take the gold buy. We should start having, yeah. So this is what I want to start seeing, right? Higher highs on the 5 minute time frame as well. So we want this downtrend to start switching to an uptrend in order to get that momentum um, to drive price up. And another reason for this, if you guys remember yesterday on the live session, we had, I guess I already deleted that. Let me see if I go to the Discord here, I'd sent some US 30 trades. Price did not make it down where we were or where I wanted it. It did come down eventually. I think it was a 30-minute time frame. Yeah. So here on the 30-minute time frame. So when eventually US 30 did go below 38,200, but what happened on the 30-minute time frame? It broke through, mitigated this zone, and as soon as it broke back up, it used this as support and went all the way up. So this is the importance of some of these zones. And luckily, even for this particular trade setup, it didn't form like either a test and rejection when it came down here. So we had a 30-minute candle that literally broke this zone and closed below. And then we had, I think, like two of them. And then later on during the day at about 2 or 3 p.m., you had them move back up. And as soon as US 30 hit this zone, it used it as support to prop price up. So you don't always want to buy on impulse. Immediately, or immediately price gets to like such a critical region. So sometimes it's just better to let price mitigate, uh do a lot of stop hunting because right here I can expect a bunch of stop hunts. So in any case, I would want this 15-minute candle to close below this daily bullish low and then have another 15-minute candle as well close below. Now, if we do have two 15-minute candles close below this region, then that's the best time to set your buy stop. That will probably get triggered like later on. Because right now, if you do set a buy stop, you can see that we still have lower lows being created. So they can easily trigger your buy stop and then stop hunt you. And then later on during the day, you have this exact move happen. And you're like, you would have rather just waited for that confirmation, or you'd have rather waited to trade later. Uh, US 30 still ranging around here. This would also be a break and continuation entry. based off of this zone, like a new break and continuation, right? Because the continuation candle is now the break candle of this SAR zone that's right here. So there's another trade setup that might be here. So this might be another one as well. So if this one closes around here, now I would be um geared towards taking this because this is only one zone. So this two, one, two, three zones are irrelevant based off of if you're looking only at this zone, because this zone has its own setup that's only been broken and continued by two 15-minute candles. So if this one closes as well, now this is a trade I might be looking to hop into. So that gold trade, and based off of what I can, if you look at US 30 on the 5 minute, we have squeezing that's happening. So if you look here on the 5 minute, you can see, and we're in a downtrend also, right? So it's just forming lower highs right there. But I know we also do have this uptrend that's here. So I might be looking, if it does close and validate at that zone that's below there, I'll probably be taking that sell instead. So whichever comes first. But I would want it to close like exactly in and around where it is right now, actually slightly above there. So this might be another setup. So what I'll look for this one, this setup right here. But we need in the next 3 minutes for that to happen. Um, 85 to 84. Perfect. So exactly what it's doing right there. So I would want it to close around where it's at. And also we still have this 30-minute trade setup. Mm. So 33 seconds. Let's see. So if this does close, I will take a sell on US 30. For you guys, as always, what is it? 0.75% risk per trade. Personally, I will, of course, I'm normally doing what, 1%. So 11 seconds. I needed to come back a little higher. Mm, okay. And There it is. I mean that sell on US 30. Let's see what else. And there's definitely squeezing here. So the one I'm in is a break and continuation of this zone that's down here. So I'm not really looking to take the test and rejection just as of yet. If price does go up, it is what it is. But this does make sense to me currently where price is at. And I'll just delete this one for now. And then gold. So remember for gold, this is whatever is happening is good. So this 15-minute, that's good enough. If this 15-minute candle closes below as well, that would be like a nice uh reason to set a buy stop. So you don't want it to go up just as of yet. You want them to finish their stop hunting and manipulation, and then you do your buy stop if needed. All right, so we'll just wait and see how this trade plays out, and then go from there. So, see, I'll probably, yeah, so those will probably be my two trades of the day. This US 31, and then the gold one will probably be my second one for the day. And we have what, 1017. And see, it's coming back to this zone. Need some nice selling pressure. Mm, 29.66. I really don't want to get stop hunted for this thing or by this thing. Um, yeah, I might get stopped out on this one, but let's see. Mm, mm, mm. Hmm. It's still going. This might get stopped out. So yeah, I'm stopped out of that US 30 trade. Ah, man, this month has just started off with a bit too many L's than I would have wanted. But anyway, so that's minus 0.75. And I'll just take a screenshot of this for my journaling. Mm, 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 mm. All right, so reviewing this trade, um, so there's really nothing, how do I put it? There's really nothing else you could have done to avoid that L, because we're just trading that one zone. Maybe the better thing would have been to wait for this test and rejection up here, because we had marked that 50 pip zone where somebody would have set break even. But even then, we were just trading one break and continuation zone by itself. So it is what it is. So this is the second, probably going to be my second and last trade for the day. But I just don't want to get into this trade too early. So here I'm looking at this uptrend here on gold, and I'm looking at to see this candle close above here, because if this candle does close above here, it will be a break and continuation as well on that daily bullish low. But we can still have some manipulation to the downside. Um, yeah, but US 30 is gone. Now there's still the test and rejection entry is still valid from up here. But at this point, I have just room for one more trade because I normally do two trades a day or max two trades a day. So I have to choose between this US 30 trade. I'm sorry, this US 30 possible US 30 setup up here. Up here and that gold trade setup based off of the bullish low. But I think I would rather go with the bullish low, daily bullish low setup. Let's see. So I'll be taking this one as well. Um, and this will be my last trade. This gold by 87.9. I would want it to come a bit back down. Um, so same thing for you guys. Point what? Point three. Uh, what? 0.5 percent. Yeah. I would recommend you guys to risk 0.5% per trade, because and that's what I'll count. So I'm in the buy on gold based off of this daily bullish low right here. We have those two candles that have closed above, and we do have that uptrend as well. So, and hoping for this pattern to play along. So hopefully I didn't get in too early, but yeah, and US 30, if anybody else has any room for other trades, that would be a test and rejection setup. But for me, since I'm only doing 2 trades a day, this will be my last trade of the day. So if I do win this trade, I'll still be up. If I do win the trade, I'll be up 1% for the day. If I lose the trade, I'll just be down 2% for the day.
So, bro, you're trading you took a buy, right, on gold?
Yeah, I took a buy based off of the daily bullish low. So I need this daily bullish low to hold.
I think it's valid though, because yeah, true, based off what you're saying, but you know, based off of the other guy, he was telling us about the session, right? So I've been doing the
Mm-hmm.
back testing. I've been doing the back testing the way he said, yeah.
Mm-hmm.
Now, it depends. It depends how you use it, because the way he does it, he looks at it like he only goes for 30 pips every time. But
Mm-hmm.
he puts like his stop loss, like it's very, how can I say, it's very tight. So the way you have to be very like precise. Like you have to do it like really, really, really well. Like, I mean, what was I saying? Yeah, so based off of London's low, he's like, oh, if it breaks it, um, you could enter. So that's what we're looking at. So it depends.
So here's what, like London low where it is, or
Yeah, yeah. I think London's low is around. Let's have a look. I think 1986. 1986.
okay. So you mean like if it breaks back above?
No, no, no. Basically, London's low was around 1986, and the high was around 1993. So he looks at he looks at the range. You get it,
Mm-hmm.
like the range. Yeah. So
Mm-hmm.
it's very simple if you think about it. All he's just saying is if it breaks one of those, very likely there will be like it's called the liquid sweep. There'll be
Yeah,
liquid.
yeah.
Yeah. That's what he says. He says it will come and retest that. That's all he does. It's very simple because if you think about it, right, it's gone to 1984, right? But the way
Mm-hmm.
they trade is like, if you really think about it, if you're using like 2, 3 lots and you're
Mm-hmm.
only going for 20, 30 pips, it's like, how can I say? It's like very. It's not risky. It's like very, the way you trade, like
Mm-hmm.
it's quite good, like because you go for more pips a lot of the times. So it's very like obvious. Do you get it?
Mm-hmm.
Like it's very
Yeah,
good.
yeah.
But other guys, what they do is they just I know it's scalping, but it's like it's not it's dangerous, but in the sense that you're going for very less pips with a lot of risk. Do you get it?
Mm-hmm.
So some
Yeah,
of these
yeah.
guys, yeah, they'll be doing like 8 lots, 10 lots for 20 pips. I don't know why is
Yeah,
what
I
they're doing.
mean that makes sense. I mean, it depends. There are people who are good at it. When I
Yeah, yeah,
first started trading, like that's what I used to trade for US 30. The person I used to follow used to do like 100 lots for US 30, and they go
yeah.
for just 10 pips or 100 pips. So that's like a $10 move on US 30. So yeah, it for me it all comes down to like your risk to reward, because like
Oh
for
yeah,
that person I'm talking about, they were going for 10 pips, but then their stop loss is 30 pips. So if they lose, they lose they lose what? So if they lost, they would have lost 3,000. If they win, they win 1,000. So for them to recover from a loss would mean they had to win like three more times. So for me, it
Yeah,
just does not. I mean, it didn't work for me, and it was making me FOMO a lot. But for me,
mm,
I just like the 1:2 risk to reward, because as much as even here, even though we've had like what, one, two, three losses, if we just have one win, it cancels out two losses, and then
yeah,
you're
yeah,
just
yeah.
left with one. Yeah. So I mean,
No,
different people, right? For some people, they're able to do it, to
yeah,
do
yeah,
it
it's huge.
that way.
Yeah, the way
This.
I don't know, yeah, yeah, you're right. But the
Yeah.
way that you look at it, like the way the amount of pips you go for, I think your risk to reward is much better because most
Well,
people
yeah.
they'll
For
do
me,
like
it's 1:2.
yeah, yeah. That's why yeah, that kind of trading much like is much safer. It's much more. It's not just safer. It's more like how can I say? It's like in your mind you feel like it's like mentally you're more. How can I say? It's like you're more. You just right. You just feel like that the trade is more. I mean, everyone's strategy is different. Everyone's trading style is different. But
Mm-hmm.
I mean, the way you do it, the way your trading style is quite good compared to others. But I mean, he's the other guy, the way he trades. Um, I mean, I think he uses 30 pip TP at like a 10 pip stop loss. But if you're going for 10 pips, I mean, it works because he looks at the session lows, session highs, and
Mm-hmm.
another thing is, those wick fill, the
Mm-hmm.
gaps, right? The
Yeah,
gaps.
yeah. The fair value gaps.
Yeah, 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 fair value gaps. But the other one is the fair value gaps is the one where there's usually three candlesticks, right? And there's one candle, it's usually the middle candle or one of them
Yeah.
that
Yeah.
leaves a gap, I think
Yeah.
without a wick. But
Yes. Yeah.
the problem is, sometimes the market, right?
Mm-hmm.
There's certain candles that might leave a gap. But when they say, oh, the market, the price will come and fill it in, the thing
Mm-hmm.
is, it doesn't always happen. Like, the 4 hour chart, if you look at it, sometimes
Mm-hmm.
I mean, those candles are much bigger, but they might leave a candle without a wick, but it doesn't
Mm-hmm.
always come and fill it in. Maybe because it's either at the low or highs. That's another thing you have to
Mm-hmm.
remember.
Yeah.
Yeah. Because I've been looking at it, and even the guy was saying, you, especially at the lows and the highs of the 4 hour, because before when we were looking at the chart, we'd just be looking
Mm-hmm.
and especially if you're trading from the lows and the highs of the 4 hour, because when you were talking about the daily bias,
Mm-hmm.
the change of the daily bias, always to look at, always to wait for the 7 days, right?
Mm-hmm.
Yeah, it's very important. It's so true. If you do the practicing, you realize um, um, how the market moves. So, especially when the daily bias changes and looking at the 4 hour, you have to take all that into consideration, or else it's not going to be good.
Yeah. Yeah. No,
Yeah,
yeah, that's true.
yeah. I mean, daily high, the daily high, daily low, the previous
Mm-hmm.
daily high, daily low. I think
Yeah.
that strategy that he was talking about is very true. A lot of the time it works. The only problem is the certain weeks you cannot do it. You have to be careful of, like, you know, um, uh, that Fed chair Powell when he does that speech.
Mm-hmm.
Yeah, when we saw in the end of September, like just this year that just went.
Mm-hmm.
Um, yeah, September, October, when we saw the big pushes, especially on gold and US 30, all of that, they dropped and some of them went
Mm-hmm.
up. Yeah, so when that happens, I remember you were talking about the daily bias. So I was thinking, why is it blasting down? Why is it going in one direction? Then I was like, oh, it's probably because the daily bias has changed. But it's not the daily bias. What it does is, yeah, what it does is when he talks, especially those weeks, what you do is you just look at the daily bias. You don't look at the four. You look at the 4 hour, but the problem is,
Mm-hmm.
the 4 hour chart. It doesn't always follow along with that. So what you have to do is you just look at the daily bias of whichever way the candlestick has closed. It's very likely they'll just trend it that direction. Because if you think about it, he talks about the interest rates, right, and all
Yeah.
of that. So if he's gonna like mess with that, that means they're gonna push it in one direction, right? Because he's gonna either put it up or down. Do you get it? So that
Yeah.
means
Yeah.
very likely the price is gonna go one way. So the way I look at it is, if he's gonna push price in one direction, then all you do is you just need to trade. in that direction. So when you said follow the daily bias, you were right. You were right what you said with that. Just trade following the daily bias on those weeks. That's all you need to do.
Yeah,
So
like following that. Yeah, and a good amount of time
yeah,
they reject off of like a certain region, like a certain SAR. I mean, yesterday, of course, for
yeah,
US 30 was a bit different, but most of the times, like for example, they will come if it's gold, shoots all the way up here and rejects back down or something.
yeah. That's true. That's true. Um, what's it called? Yeah, especially those day when you were talking about uh, the daily and those daily order blocks.
Yeah,
You're right
daily,
about.
weekly, and 4 hour. Those ones are nice
Yeah,
ones.
yeah. Those are nice ones. Yeah,
Most of the times they manipulate. That's why, like for this one for gold, I'm almost sure like later, maybe later on, gold will pump up. But I'm just hoping we don't get that manipulation down here
yeah,
because most of the times they bring it all the way down and then
yeah.
later on come back
True, true, true.
all the way to the top.
I think you're in the buy, right? Where did you enter again? Was it 1987?
Yeah, 87.8 or something.
Oh, yeah. I mean, they should take it back up to that. They should take it up.
Yeah, but they can bring it back down and form this pattern that's right here.
True, true.
But we'll see. We'll see
Yeah,
that
that.
how that goes.
But
Nice.
it's not, sometimes the problem. I know that's just how trading is, but
Mhm,
if you just entered when you enter right, like nicely at the low or the high,
mhm.
oh, those are the best.
Yeah, yeah. And I
Yeah,
mean, even, I don't know, just this month has just been a little tricky. I mean, for me,
yeah,
I don't know, it's something, but anyway, it's good to know
mm,
because I mean, like last year, I think I started doing the live sessions in March, but I don't
yeah,
remember February. I mean, February, one thing I noticed, December and January are more ranging markets. That's why if you
yeah,
even look at the SARs during January and December, right? Though you had a sell and then almost like 4 days later you have a buy or something. So it's a lot of manipulation during January and December because I think there's more consolidation during those periods.
yeah.
Mm. Yeah, this one
Exactly.
was the best entry right here. I need to journal this. This one, waiting on that one would have been better, but it's fine. Need to see how this gold is gonna go. It just looks like they're gonna try and manipulate it down and
Yeah.
then bring it back.
Problem is tomorrow's retail sales. So
Oh yeah, tomorrow's Thursday, right?
yeah,
Yeah. That's true.
that retail sales is dangerous as well.
Yeah, sometimes big moves. But tomorrow might be a little bit more mellow. I think tomorrow will probably be a continuation of CPI because
Yeah, yeah, yeah,
this CPI was heavy.
yeah. That CPL was nasty. Yeah, that was
Yeah,
yeah,
you had a lot of heavy moves. I want this 15-minute candle to close above this daily order block.
that was a nasty CPL.
Yeah, that was crazy.
Yeah, that one
Mm.
yesterday. Another thing is what's it called? Yeah, with his, I've been doing some more. We need to do some more backtesting on that. Just just the daily high, daily low, previous daily high, daily low. I think that's
Mhm.
simple because what you're doing, you're just gonna wait for one of those to be broken. And once you wait for it to break, of course you cannot just enter. You have to wait for. There's a few things he says to wait for, but
Mhm.
with the sessions, that's the real tricky one. It's not tricky, of course, once you know what you're doing, but it's hard in the sense that sometimes what they do is, like you said, you were right. They said that they could push it all the way to maybe an order block or something that can manipulate the price and then bring it.
Yeah.
Because sometimes, yeah, what you said is sometimes yes they break it, but when they break it, you know how you said they take out the buyers or the sellers. They
Yeah.
do that all the time. Yeah. So if you enter too early, you might be in like big drawdown. So
Yep.
yeah, um,
That's the thing to watch out for.
yeah. And there's so much like, especially in heavy news weeks, it's hard to trade certain strategies. Like, I mean, that's not surprising, but um, with the SAR strategy, on heavy news weeks,
Mhm.
I mean, yeah, they manipulate the price, but I think the way you said to do it on heavy news weeks, just follow their daily bias. You're right on that. You are very right on that one. Because I've been seeing it, and it happens all the time. And the other guy, what he says is, in heavy news weeks, I've seen it nearly all the time. You just wait for the range, the range during Asia.
Uh-huh.
You don't trade Asia, because what we've seen is, even the other guy was saying, the other two guys, they were saying, I think Livy was saying it as well. They were saying during Asia, the New York high and low, it doesn't respect it. It doesn't respect it at all. I don't know, Asia, it just moves weird. I don't know why. So all they say is, during Asia, just let it just do whatever, and then wait for, I think, is it 7 or 8? I think it's seven.
Yeah, yeah, yep,
Yes.
yep. Yeah, I remember
Yeah,
Livy saying that.
yeah, because they're right. Both. The thing is, a lot of traders, if they start saying the same thing, you start seeing that there's a pattern. Because if they're all saying it, there has to be something about it. They can't
Yeah.
just be all the same. Yeah. So that 7 a.m. I think there's that the what's it called? It's an overlap that happens. And that overlap is very important, because that London, I think that it's usually a pump. Sometimes they can do it the other way. But they both of them were right when they were saying that there's a pump or something happens. So you need to look at 7 a.m. and then it's like what's it called? Yeah. So during 7 a.m. Something happens, and then all you do is you wait for, is it Asia? Yeah, you look for the range in Asia, and then all you do is, it's usually on gold, like it could be anything between 50 to 100 pips, something about that, something around. Or it could be anything around that. But whatever happens, you just wait for Asia. You just wait for London session to break one of those. And very likely it's gonna do. Very likely. That's all you have to do. And then during New York, you do the same thing. But during heavy news weeks, you just want to trade London session, especially with this strategy. Maybe with the SAI, you could trade every session. But what I've realized is, during heavy news weeks, you just want to trade the London session before the heavy news, on the heavy news day. So, like,
Oh,
yesterday.
I see what you mean.
Yeah. Like, yesterday, CPI day, you would have only wanted to trade London session yesterday. You wouldn't have traded New York with this strategy. It wouldn't work. The same thing with another
Yeah,
few
I mean,
strategies. Because
for me, I noticed like London trades for me end up, and that's the reason I don't trade London. For me, London trades end up at break even, like even after back test. I think it's because of my risk to reward, because I mean, I don't
yeah,
have a big stop loss or big whatever, but most of
yeah,
because most of the times London it goes one way and then reverses a little bit, and then during New York, see, I knew this freaking. This
yeah,
was the best. This was the best entry right up here. Anyway, I'll catch it next time. Yes,
yeah,
for me, I realized like London, most of the time I end up at break even. So that's why I don't even bother trading London. Yeah, but I think London, if I were to trade it, I'll probably lower my risk to reward. But
yeah.
yeah, but anyway, I have to go. But yeah, this US 30, as I'd said in the start, because this would be at break even right now. But anyway, and then now watch them manipulate gold. But anyway, it's a lesson learned.
Yeah,
Catch it the other time. But anyway, man, yeah, I gotta go. But
yeah,
yeah, yeah. But what you said literally makes sense. Yeah, it
yeah.
definitely makes sense.
All right, bro. Then tomorrow, right? You're gonna
Yeah,
be
yeah. Tomorrow, man.
yeah.
Hoping to end this losing streak. But anyway, all right, man. See you
All right,
tomorrow.
all right.
All right, peace.